Welcome to the Tuesday edition of Tech Stocks Daily. Today, we're diving into riveting narratives shaping the NASDAQ landscape. First, we'll explore the legal maelstrom swirling around Integral Ad Science as they face not one but three major securities fraud lawsuits. Then, AppLovin's intriguing options trading surge has captured market watchers' imaginations. Will it be a calm breeze or a financial typhoon? Finally, grab your headphones as we decode Apple's buzzworthy financial insights and tease potential product reveals hotter than Cookville's espresso. Stay with us as we navigate these headline-grabbing stories. All right, tech fans, let's dive right into today's big news surrounding Integral Ad Science Holding Corp, or IAS for short. It's been quite the roller coaster for IAS, as they're making headlines not because of a new product launch or industry accolades, but due to securities fraud class action lawsuits, 3 of them to be precise. First, let's break down what Integrated Ad Science does. They're a global leader in digital media quality, providing measurement and optimization solutions to boost the quality and effectiveness of digital advertising. Sounds like a steal, right? But here's where things got a bit rocky. NASDAQ-listed IAS is finding itself in hot water after disappointing investors not once but twice in 2023. It all began on August 3, 2023, when IAS released second quarter financial results revealing slowed growth due to maturing context-controlled growth and lesser demand from tech and telco clients. The aftermath? Their stock plummeted overnight, dragging investor sentiment along with it. Fast forward to February 27, 2024, where they reported missteps once again, missing fourth quarter estimates due mainly to competitive pricing pressures forcing them to slash prices, affecting their revenue. Ouch, this sliced their stock another 41.5% further, leaving investors sore and seeking answers. Enter the lawsuits. 3 heavyweight law firms, Glancy Pronge & Murray LLP, Kessler Topaz Meltzer & Check LLP, and Bernstein Liebhardt LLP are stepping forward, each rallying investors who took a hit on IAS stock. Their collective accusations? That IAS engaged in materially misleading statements by downplaying the effect of competitive pricing and thereby masking weakness in their revenue growth strategy. Investors allege that IAS provided falsely optimistic forecasts and failed to properly disclose several material adverse facts about the company's operations and business prospects. In short, what should have been openly acknowledged bumps on the road were glossed over, or through some views, kept forward, ignored until reality, and IAS's stock price came crashing down. These lawsuits claim IAS fell short in transparency, noting that pricing had become a key battlefield next to competitors, contrary to what was depicted. Investors had the wool pulled over their eyes, say plaintiffs, resisting a potentially more volatile assessment of the company's economic health. Now, through these suits, investors are looking to recover losses sustained between March 2, 2023 and February 27, 2024. With the deadline for seeking lead plaintiff status set for March 31, 2025, the clock is ticking for interested parties. The firms have launched a full court press to get word out and rally potential claimants. If the lawsuits hold in court, IAS could be facing severe financial repercussions and might need to rethink its plotted course of adjustments. So there you have it. Integral Ad Science aimed for quality ads, but ended on the wrong side of a quality narrative. Let's see how this legal showdown unfolds and whether another chapter of learning follows this seasonal thriller. Stay tuned as the courtroom drama develops. Today, AppLovin is making waves due to some eye-catching activity in its options trading on the NASDAQ. This caught the attention of keen market observers and investors, and here's why it's significant. Typically, when options traders start moving large amounts of money in the market, it sends ripples across Wall Street. It seems the big money, often referred to as whales, has fancied a bearish stance this time around towards AppLovin, which might suggest looming volatility or anticipated major developments for the company. Nobody knows the names of these investment heavyweights, but trust us, their wallets definitely speak volumes. Our friends at Benzinga spotted this unusual trend when their options scanner beeped an alert about AppLovin's increased activity. With an impressive 69 options activities recorded in a single day, it's more than your typical Tuesday for App. Diving into details, 40% of these mega investors are feeling optimistic, while a solid 44% have packed their bearish umbrellas. Oh, and let's not forget our delightful middle grounders who play it safe. Of these significant options, 12 are puts, amounting to $704,290, and 57 are calls with an overwhelming $11,166,448 at stake. The whales seem to have their sights on AppLovin's price, ranging from $50 to $780 over the past quarter. That's a broader range than the search for Atlantis, folks. For the uninitiated, AppLovin is renowned in the tech space for being a key player in the mobile app world. Their tools and software enable app developers to supercharge their growth by automating and optimizing how they market and monetize apps. In other words, they're fueling mobile app success stories one download at a time. Momentum is another crucial factor when critiquing AppLovin right now. This ad tech marvel is part of a notable list of momentum stocks that investors should be keeping an eye on, with its shares soaring by a commendable 58.9% in the recent months, surpassing the S&P 500's rise of just 3.3%. AppLovin also flaunts a grand momentum score of A. They had the Zacks consensus estimate for current year earnings hiked by 12.7% over the past 60 days. That's a gold star sticker if I ever saw one in financial markets. Yet beyond the rose-tinted lens of share price ascension, volatility in options trading underscores the complexities of market sentiments towards AppLovin. Is it a financial foreshadowing of changes within AppLovin or a market move mirroring overall tech sector fluctuations? That remains to be seen. Overall, today's headline-grabbing activity around AppLovin highlights the intersection of trading strategies and company performance. For investors, it's a vivid reminder of the layered analysis needed when considering jumping into the stock market waters. Options are risky, but they can also yield lucrative returns. Today is all about that iconic logo, Apple. Why are they making headlines? Well, there's a fresh mix of financial insights and impending product excitement that's got everyone buzzing, from Wall Street pros to your neighborhood tech enthusiast. Let's dissect the situation. First up, Apple is under the analytical microscope for its performance in the technology hardware, storage, and peripherals industry. According to Benzinga's content engine, Apple is in a unique position, possibly undervalued in some areas, thanks to a price-to-earnings ratio that's notably lower than the competition. That's what some investors might call a bargain. However, when we peek further into other metrics like price-to-book and price-to-sales ratios, Apple appears as a bit of a premium pick. It's sort of like finding a Prada bag at a good discount. It's still not cheap, but it could be worth it. The big spotlight, though, is on the return on equity, or ROE. With a figure significantly higher than many industry peers, Apple's equity is working overtime, raking in profits like a pro. Similarly, the company's EBITDA and gross profit tell us Apple isn't just competing, it's dominating the profitability Olympics. But here's the rub. Their revenue growth is looking a little less ambitious compared to competitors. So while Apple's got the cash bling now, they're walking tightrope over the revenue expansion void. Now, flip the page, and here's a curious piece of information from Apple headquarters in Cupertino, or as I like to call it, Cookville, California. Mark your calendars for February 19th, 2025. It sounds like Tim Cook might be teasing us with a new product drop, a potential new sibling in the Apple family. Cook's cryptic post, shared on X, has set the rumor mill churning faster than a double espresso shot. Can we expect a new iPhone SE? A revamped MacBook Air? While Cook's post leans singular, only promising the newest member of the family, there's no harm in dreaming big. Historically, Apple's new product announcements have sometimes launched stock into the stratosphere. But let's be honest, any new gossip from Apple would need more flair than a mere press release to boost investor thrill. So, don't necessarily bet the farm just yet. So Apple delivered a day loaded with potential, both in forecasts and fresh teasers. Now it's your turn to tell me, do you see Apple's latest stats as a golden ticket? Are you chomping at the bit for their next product reveal, or do you prefer to wait until the dust settles? Let me know your wisdom, forecasts, or wildest guesses in the comments below. Engage, analyze, and mull it over, Apple fans. Hack Apple Buzz, I see you, Cupertino. All right, folks, let's take a closer look at AppLovin, given today's sizzling news on options trading. Now, if I'm wearing my analyst hat, and it's quite snazzy, if I do say so myself, I'd lean towards the observe and hold stance for AppLovin at the moment. Why? Because the whiff of volatility in the air is strong. Here's the deal. We've seen big-time options traders, the whales, going to town with an increased activity as a mixed bag, 44% bearish, while some others hedge towards optimism with those calls. It's like watching a financial tug-of-war. That, combined with the impressive 58.9% uptick recently in an A-rank momentum score, suggests that AppLovin is on an upswing presently. But hold your phones. Our adventurous industry observers are also flagging a potential market shakeup or internal shifts. Until there's more clarity on what the volatilities mean, I'd say opting to hold is prudent. It's like waiting to see if that suspect cloud overhead is just passing or the next storm brewing. A firm hold allows you to keep a stake in what's currently a high-flying investment, capitalizing if things trend positively, while also hedging against the uncertainty suggested by that options trading volatility. Remember, as exciting as trading can be, always do your own research and perhaps chat with a financial advisor to best align actions with your personal investment goals and risk tolerance. Everyone's financial picture is as unique as an algorithm. Stay informed, stay savvy, and happy trading. Invest smart, hold and behold. Today's tech market has been nothing short of an exhilarating financial roller coaster. From integral ad science grappling with intense legal challenges to AppLovin's options market swirling with volatility, there's plenty to chew on. Apple, meanwhile, keeps everyone on their toes with the promise of tantalizing new product teasers and dual-natured financial signals. If you found today's Tech Odyssey exciting and insightful, make sure to hit that like button, subscribe for your daily dose of tech news, and share this with your tech-savvy pals. Tune in tomorrow to stay ahead of the curve as we continue navigating the thrilling world of technology and finance. Stay curious, and see you soon.